we're continuing our coverage here from the World Economic Forum's annual meeting in Davos. And joining me now is the former Governor of the Reserve Bank of India, Raghuram Rajan. Sir, thanks very much for joining us here at cnbc TV 18. The mood here is one of caution and pessimism. If you look at the IMF forecast, or you look at the PwC CEO survey, all seem to be pointing to downside risk to the global growth and global economy. What's your own take? Do you believe that the pessimism is overdone?
Well, I don't think it's overdone. I mean, what we have is a still reasonable recovery, but with increasing risks. Of course, the biggest risk that people don't know about is what's happening in China. With the trade war going on, with the slowing because of earlier measures to tackle the financial sector problems, China is slowing quite fast. And of course, the Chinese numbers don't tell the entire picture. Now, we also know the world is very well integrated. So when China slows, German capital goods exports slow down. Germany is slowing, Europe is slowing. And of course, the US, after a very strong year last year, this year is going to slow to a more reasonable level. So given all this, I think there is a lot of uncertainty. And the uncertainty about policies is really killing. When you don't know whether there will be 25% tariffs or 0% tariffs, where do you invest? You can't invest here because the tariffs may come off. You can't invest there because the tariffs may stay on. So you can see that the geopolitical uncertainty is something that has business, somewhat paralyzed. Now, the upside is if these go off, if somehow China and the US reach some kind of deal. The problem, of course, is that this seems like a much bigger war between them than just about tariffs. It's about geopolitical supremacy. It's about military might and relative military might. So I don't know if just an announcement before March 1st will be enough to quell the mood and lift it. Certainly the central banks have stepped back and said, well, we were thinking of raising rates because growth was strong. Now the Federal Reserve is seeming much more tentative and saying we'll see how things go. So my guess is underlying strong growth still, not spectacular, but with a lot of risks. And now the central banks are stepping back from the process of raising interest rates and going to watch and see what happens.
Since we're talking about central banks and you talked about how the Fed is probably going to slow the pace down on further hikes, the clamor in India is for a repo as well as a CRR cut. In fact, most bankers that we spoke to before I headed here to Davos said that you cannot have rates running at this level in India. The RBI and the MPC need to move. What's your own take?
Well, I guess the broader question, I don't want to address the monetary policy question, leave that to the RBI to decide. But the broader question is India, does it have plenty of spare potential? And I think one of the worries is even at this level of growth, which, as you know, is not producing the jobs that people want, at this level of growth, we are seeing core inflation pretty strong, above 5%. So the worry is that we talk about there being the potential to grow much faster, but does it really exist? Do we have the capacity to grow, especially given that this budget is probably going to be a more expansionary budget than the ones we have seen?
What are you expecting?
I have no information more than you have. I mean, there is talk of some kind of an agricultural package. We have to see what form it takes, whether it substitutes for existing packages or adds on to existing packages. And presumably there will be some election year benefits for people. I don't know what it will look like. My worry is that our fiscal consolidation, as the CAG has reported, there is a lot off balance sheet, which...
But that's not new.
It's not new, but the question is, what is the relative scale? And one would love to see a full accounting of how much has been pushed into our public sector units to borrow rather than the government borrowing. FCI is now borrowing. I mean, there are lots of places where now we have fiscal expansion, which perhaps is different. Now, what one really needs to do is a full-scale accounting, both for how much we are actually spending now, but also the liabilities we have created for the future. Because, things like this very much needed health insurance program,
Yeah.
but also the liabilities we will be taking up if we have a new scheme for agriculture. These are things we need to add up and say, well, we can't roll them back. Can the government afford them, not just this year, but when they're fully rolled out, and depending on the state of the economy, they may or may not be affordable.
You know, if there is a direct benefit transfer scheme that is announced for the agriculture sector, and we don't know the quantum, the assumption is that perhaps a pilot for small and marginal farmers, that will be the first installment. If that were to be the case, and it's not the 2.5 lakh crore rupees that would be required for a full-scale rollout, if it's between 60 to 70,000 crore rupees, is that something that you believe that the markets will understand?
Well, anything that is contained and that still meets the fiscal target, because the government has been very strong in saying we will meet the fiscal target, is something that probably the market will take in its stride, especially given that it expects this is election year, there will be a different budget than the ones it has seen so far. For the country itself, any of these schemes, we have to look at the longer term consequences. Is the pilot inevitably going to mean a full-scale rollout?
Yeah.
If it's a full-scale rollout, what is the magnitude? And two, does it add to schemes or do we substitute for schemes? That's important, because we say we need this because existing schemes are not working, are creating distortions. Well, then we should do away with the existing schemes. What's the process by which this is rolled out and the existing schemes rolled back? That's something to think about.
Well, you know, since we're talking about processes, the Economic Capital Framework Committee met already, and it's meeting for the second time on the 24th to discuss the issue, the controversial issue of the RBI's capital reserves. Now, you know, the former RBI Deputy Governor R. Gandhi has been quoted as saying that Raghuram Rajan had put forward a formula on the use of capital reserves, but that was not accepted by the government. What was this formula that you had shared with the government which was not accepted?
No, I'm not sure that there was a formula. There was a process by which we account for capital, which was actually one of the most modern processes, looking at value at risk and how much could be afforded, and what we could therefore transfer to the government. And I think this is something other central banks have picked up. We were asked to make presentations elsewhere. It is something that offers a basis for discussion going forward, and it's something we should think about.
So what was it that you suggested to the government, and what was the response that you got from the government on this?
No, I think what we had suggested is we need a scientific process by which we evaluate how much capital the RBI needs, and based on that we declare a dividend, rather than negotiate this every year around budget time. How much do you need? How much can we spare? Etc. etc.
Yeah.
Let's do it on a basis.
Do you believe that that process is arbitrary somewhat?
Well, by its very nature, it's arbitrary, because it's based on what the needs of the government are, rather than what the RBI needs in terms of maintaining its balance sheet strength and so on. So I would start first by saying, here is how much the RBI needs to present a picture of health, because we need a strong central bank. And then anything that is excess should be paid over to the government. It is the government's. The RBI has no call to keep anything that is over and above that. The magic question, of course, is
what is that number? Yeah.
What is that number? And for that, having an objective process of deciding how much that is what Mr. Gandhi was probably referring to. We had a team within the RBI do the calculations, prepare the structure. This splendid young team, which essentially read the latest literature and put it together. And the question is that the basis for proceeding forward? It is state of the art in determining how much capital the RBI needs.
So was that taken forward at all in any form or fashion by the government in your conversations with them?
I think we had a discussion then. We put it on the table. The board at that time approved it in a sense of this is a basis for discussion going forward. The government at that point decided that they needed to learn more. So it wasn't that it was rejected. It was just that we never concluded on that.
So given the work that you did in the past and the fact that there is this committee that's looking at this issue, what should be the guiding parameters?
Well, it's up to the committee to figure it out.
No, but what would you suggest? What was it that you put on the table?
I think the committee will think very carefully about this. And I think the 2 or 3 big issues that it will consider first are that what is the appropriate level for the RBI to maintain a strong, healthy balance sheet, especially when it looks, when it's outward facing towards the rest of the world. The second issue is, okay, once you've decided this is a quantum that is excess, how do we actually pay it out? Because there's an accounting issue in whether you can pay out things that are not generated through profits, but that are generated through, for example, foreign exchange depreciation. And that accounting issue has to be dealt with because that is a constraint. And the third issue is how do you pay it out without monetizing a large part which you cannot really afford to given the liquidity conditions in the economy. All three have to be thought of. My sense is that previous people have opined the best way to actually pay out a large dividend to the government is to write off the bonds that you hold on your balance sheet of the governments. So the government's debt comes down and you don't monetize the process. That's something to think about, but that's more me speaking with my academic hat.
Well, let me continue to get you to speak using your academic hat. Arvind Subramaniam had said that you differed with him on the use of the capital reserves. His idea in the economic survey that he put forward was sort of a public asset rehabilitation agency or recapitalization of banks using the 4 lakh crore rupees, which he believes was excess capital. You differed with him on both these. Why?
Well, the public asset reconstruction agency, what people call the bad bank, my worry was that bad bank would be manned by government or public sector officials. And so you won't solve any problem in terms of reducing the bad loans because it would go from the pocket of the public sector banks into the pocket of the public sector reconstruction corporation. Why would they have any stronger incentives to deal with the bad loans than before? So it seemed to me that this was just changing from one pocket to another, something we do often in the government in India today and in the past, and it's something that I don't think changes very much on the ground.
On recapitalization?
On recapitalization, it led to the very issue that we were just talking about. If the banks are granted this money, will they spend it? Will it lead to monetization? And he had some scheme for trying to ensure that it actually wasn't spent. To my mind, all these clever schemes can be short-circuited by simply saying, government, we owe you money, we have some of your bonds, we'll write off those bonds. And so your debt level, the government's debt level would come down. Now you figure out how much you need to borrow in the ordinary scheme of things. It also is the right thing to do because remember these surpluses have been built up over many years.
Yes.
It is what essentially belongs to governments over the years.
Yes.
And to that extent, by writing down the debt, you will create the conditions for this government to move on with, based on what it should have inherited from past governments. So if it needs to borrow more, it should borrow more, but that should be explicit and identified and as additional government borrowing.
You were talking about ideas, and the universal basic income was an idea in the economic survey put forward by Arvind Subramaniam. He called it an attractive and an appealing idea that should be debated. Sikkim is going to be the first state that experiments with rolling it out by 2022, but small in size and scale. Do you believe that UBI-like experiment is something that India should take forward?
Well, I think there is certainly some merit in moving away from many of these sort of transfers which are done through goods. For example, a fair price shop and so on. It becomes much easier to manage for the government if it offers a transfer in terms of cash, provided there are stores in which people can spend that cash. So direct benefit transfers have a benefit. In the agricultural sector, there might be some benefit to making direct benefit transfers to farmers rather than, for example, this elaborate apparatus of, minimum support prices, food price procurement that takes place haphazardly across the country and that sometimes distort the kind of planting decisions the farmers make. So I think there are some places where it could be thought of. But typically, in order for us to be able to afford it, it has to come by pulling back existing schemes. It can't be just another add-on.
Sure.
Second, I think at this point it is really too early for India to consider universal benefit transfer broadly to the population. It seems to me that we first have to think about creating jobs. And let us not distort the job market by creating a sort of alternative route for people. I think selectively in places offer work which is compensated for by the government. For example, the Manrega scheme has been quite beneficial in alleviating rural distress in some areas. We need to think about doing it much more targeted, much more selective. We're not a rich country. We can't afford these blanket big schemes.